This one candle rule makes trading so simple. It's a powerful scalping strategy that is designed to take advantage of the first 90 minutes of market open. This strategy is based off of one candle. It's repeatable, mechanical, and the best part is sets up every day. And in today's video, I'm going to share with you the one scalping rule that helps solve 90% of my trading problems and help me become a consistently profitable trader. And then I'll show you real trades on the charts to show you exactly what this will look like in real time. Let's get into it. Okay, so in today's video, we're going to talk about the one candle rule / strategy. And this is one of my personal favorite strategies because it's based off of one single candle. It's repeatable, mechanical, very easy to identify. And you'll see a lot of the times when we're in trending markets, price will respect these candles, which are essentially up close and down close candles. And this strategy right here has allowed me to get results like this, and this. And in today's video, I'm going to show you exactly how to identify this one candle scalping strategy. And in today's video, I'm going to go over exactly what this one candle scalping strategy is, how to identify it, how to use it. And then I'm going to be going onto the charts to show you guys exactly what this looks like in real time. So with that being said, what is the strategy / concept? And the strategy / concept is all based off of one single candle. And the candles that we're going to be talking about today are up close candles and down close candles. In other words, green candles and red candles. And it's as simple as that. Being able to identify these up close and down close candles on the chart and understanding the logic and reasoning on why these candles work and why we can take trades off of them is going to be very important. So in today's video, we're going to go over the confluences when trading these up close and down close candles. We're going to go over different types of higher time frames / setups. We're then going to go on to entries, stops, and targets, and the different types of entry models that you can use when trading this one candle strategy, right? Either waiting for confirmation candles, right? Waiting for strong price action, the different types of ways you can use this one candle strategy. So first things first, how to identify the one candle rule / strategy. Number one, we want to wait for a clear trend in the markets. So as you can see right here, what we have is an uptrend in the markets. We're making higher highs, higher lows, higher highs, and we're pushing towards the upside. So step number one is fairly simple, being able to identify a clear trend, which is just basic market structure and understanding if we're making higher highs and higher lows. If we're in a downtrend, it's the opposite. Lower highs and lower lows should be made. Step number two, we now want to wait for a break of structure. So what is a break of structure? As you can see right here, what we have is a key pivot high. When we break above this key pivot high, this is what's called a break of structure. So price breaks structure towards the upside, and now we're looking for continuation higher. So this is what's called the break of structure, essentially just breaking above an old key pivot high for momentum back towards the upside. And step number three is mark out our one candle rule / order block. So in this case, you can see price moves towards the upside. Now we're coming back down. What are we going to do? I'm going to explain to you exactly how to mark out these up close and down close candles here in a second. But essentially in a clear uptrend, we're marking out down close candles, and we're going to mark out this level right here. And this is the exact level we like to see hold here for a push back towards the upside. So as I mentioned earlier, what we have is one candle, and this is what's called our bullish order block. So in an uptrend, price will respect down close candles. What are down close candles? Once again, they're essentially another word for just saying red candles. So as you can see right here, what we have is a red candle. In a clear uptrend, price is going to respect this full candle. So right here, this full candle can be marked out as what's called a bullish order block. When we're above it, we really just want to see price hold this order block for continuation. It's as simple as that. We want to see down close candles support price towards the upside. And now if we go on to an example, as you can see right here, what we have is a clear uptrend in the markets. Just by looking at it very quickly, you can see we're in a clear uptrend here. And now what we're going to identify is down close candles. So as I mentioned, down close candles are other words known as red candles, and you can drag it over and you can see price breaks above, retest, continuation. The next down close candle, you can mark out this level. Price breaks above, retest, continuation higher. Another example here, price breaks above this down close candle. We can mark this out, price breaks above, retest, and continuation higher, and so forth. As you can see, as I mentioned, in a clear uptrend, price will respect down close candles. This is what's called a healthy trend in the markets, is when down close candles are being respected. When down close candles are being disrespected, that's a sign for a potential market structure shift or a change of character. Now let's go on to the different types of down close candles in an uptrend, going from the highest probability to the lowest probability. So number one right here, what we have is the highest probability order block. In reality, you can draw out this order block as the full candle. On every single one of these down close candles, you can mark out the full thing. But the highest probability is when price respects, number one, the wick to the body. So let's say, for example, we end up closing above it. Now price, really, you like to see respect the wick to the body for continuation higher. Really, you just like to see price tap in towards our key level and expand away right off the bat. Number two in the middle, what we have here now is the wick to the bottom of the body. So if the wick is very small, what we can do is mark out the top of the wick to the bottom of the body. And this is the general area we like to see price respect for continuation higher. And then the last one is going to be our full down close candle marked out. When we have no wicks, we're going to have to mark out the full order block. And in this case, price can respect the top. It could dig into the middle, or it could come all the way back down in towards the bottom and still be respected for a continued push higher. But as I mentioned, it goes from the highest probability to the lowest probability. So when you're looking at an uptrend, if price is respecting the top of the wick to the body, that's when you're going to have those highest probability trades towards the upside. And now we're back onto our original example. As you can see right here, now this will make a little bit more sense. So the first candle pushes higher. What are we going to have marked out? We can have marked out our wick to the bottom of the body. We can have our wick marked out to the top of the body, but you can see price is respecting this level very nicely. It wicks down in towards our key levels, but you can see where the candles close. That is what's key here, the candle close. You can see price never closed inside of this order block. The bodies respect the top of the wick, so this is a good sign that the buyers are stepping in. And you can see nice continue push higher. What's the next order block? The next order block from the wick down into the body, once again, price pushes higher, respects the top of this order block. Once again, we tap into it, but we do not close anywhere inside of this order block. And you can see nice continuation higher. If we mark out the next order block from the top of the wick to the bottom of the wick, we have the full down close candle. You can see price actually comes all the way back inside this order block, and we're still respecting this level. You can see we closed inside of it, but ultimately we still held. The order block is valid until we break and close underneath the order block. So you can see buyers stepped in, dug a little bit deeper into this order block, but ultimately respected and continuation higher, and so forth. If you want to keep marking them out, you can mark out this order block here. Of course, there are other order blocks, but we never gravitated in towards that level. So this is what we have marked up. Once again, we have the full down close candle. Price comes into this order block. Bodies are respecting this down close candle. If I zoom in here, you'll be able to see it a little bit better, but you can see price respects this down close candle very nicely, specifically the bodies. And then we have that next continue push towards the upside. So with this being said, you guys should have a clear understanding of what down close candles look like here in an uptrend and how these down close candles support price for a move higher. Now let's go on to the bearish one candle rule. All right, so now we're on the bearish one candle, or other known as the bearish order block. So as you can see right here, in a downtrend, price will respect up close candles. So it's a complete opposite. When we're in a downtrend, we have up close candles. When price is underneath, we really want to see these up close candles be respected for a continuation towards the downside. And what does this look like? As you can see, in a downtrend, price will respect up close candles. So we're just going to mark out key levels. You can see price respects it here. Other down close candles we can have marked out respects, continuation lower. Other ones we can have drawn out, and so forth. And you can see right here, in a clear downtrend, up close candles will support price lower. So you can see how these candles work. Whenever we're in a clear, healthy trend, these candles are going to be used as support and resistance. And it's the exact same thing to the upside. So what do we have here? We're going to talk about these up close candles in a downtrend from the highest probability to the lowest probability. As I mentioned, the full up close candle is what matters. But if we're talking about the highest probability and where we want to see price respect, it's going to be from the bottom of the wick to the bottom of the body. So if price is underneath, we want to see respect this for a continuation lower. The second highest probability is going to be from the wick to the top of the body. So price can reject the bottom, or it can dig a little bit deeper into the body and continue lower. And the third is going to be that full candle. So if there's no wicks, you can draw out the full candle. If you have wicks, then you can draw it from the wick to the body. And in this case, you will either want to see it reject off the bottom, it can dig in the middle, or it could come all the way back towards the top and still be bearish for continuation lower. So with this being said, let's see exactly what this looks like. So as you can see here, we're on our example. We have our order block marked out. In this case, we have very minimal wicks to both sides. So I'm just going to draw out this full body and drag it over. And you can see price closes underneath. That is when the order block is valid. When price closes underneath, then we could be looking for your up close candle to be used as resistance for continuation lower. So as you can see, price digs a little bit deeper. This is a little bit of a lower probability order block, but digs a little bit deeper, still respects it and continues towards the downside. The next order block I have drawn out. Similar thing, we have a pretty big body, very small wicks. This is the area that we're going to draw out. You can see price closes underneath, comes back up, respects the wick right off the bat, but actually comes a little bit deeper into this order block, still holds it, and then ends up continuing lower. What's the next order block? The next order block is this one. As you can see, we have a nice lower wick. You can draw it up to the body, price closes underneath, and you can see price digs a little bit deeper into this wick to the bottom of the body, but respects it very nicely, closes inside, but does not close above. And then you can see continuation lower. We can draw this from the wick to the top of the body, price closes underneath, retest, nice rejection right off the bottom of the wick here, and then continue lower. So right here, you can see this is a great example, and we should have a clear picture of what up close candles look like in a clear downtrend. Now let's go on to some entries, stops, and targets. So as you can see right here, based off the information I talked about today, now let's go on to how we can use this in our trading. So as you can see right here, what we have is a clear uptrend in the markets. Within the first 5 minutes, you can see really strong push higher. What are we gonna have marked out? As you can see, we have one down close candle, which is right here. If we're marking out this down close candle, we can mark out the full thing. So if we mark out that full down close candle, this is exactly where we like to see price respect for continuation higher. So let's say, for example, if we enter in price as it approaches the top of the order block. What you have to understand here is that, let's say, for example, you buy at the top of the order block. Where is your risk going to be? Your risk is going to be all the way down towards the bottom of the order block. So regardless of how you draw out this order block, your risk is going to be a break below the order block, and your entry can either be at the top of the order block, it could be at the middle of the order block, or as close to the bottom of the order block as possible. So let's say, for example, you enter in here. Your stop is going to be all the way at the lows, and in this case, it came very close to your stop, never closed below it, and price reversed and had a nice continuation higher. So this is entry number one. Entry number two is you want to have an entry at the middle of the order block, or where the top of the body is. Let's say, for example, we mark out this order block once again. Our entry can be at the middle of the order block. So we can have an entry here, looking for continuation back towards upside, and you can have your stop at the bottom of the order block once again. In this scenario, right, we have lower risk. But what happens? Since we do have lower risk, this also means that, in my opinion, it's going to be lower probability, and also sometimes price doesn't always come back to the middle of the order block. You'll see sometimes if you have a limit order, price will tap the top of the order block and just shoot really quickly, and you'll end up missing the trade. So you want to be using these order blocks in combination with other strategies as well and other confluences. But this is entry number two. And then entry number three is waiting for strong price action. So in this case, if we draw out this order block once again, right, you could be looking for the candle close back above this order block with a stop just to break below. Or as you can see right here, strong buyers came in once again. And you can see once it closed back above this order block, you can look for an entry with a stop either at the low of this candle or the low at the all the way down and towards the bottom of the order block for kind of that continued push back towards the upside. But number three entry is a little bit more discretionary, so I don't want to talk about it as much, but it's basically just waiting for strong price action plus candle confirmations. But when you're trading these up close and down close candles, as I mentioned, just understand that the whole candle is what has to be respected. So your stop is always going to be at the low of the order block, and that's what matters. Your entry doesn't matter as much in this case. Your stop is what's going to be key, which is going to be the invalidation or the break below the down close candle. If we're talking about it towards the downside, fairly similar thesis. Key levels that we're going to have marked out is going to be this up close candle. You can see price immediate rejection right off the bat for continuation lower. In this case, let's mark out that 5-minute opening range towards the downside. You can see price has a big push lower. where are we going to be looking for that retest? Really, we're going to be looking for this up close candle right here, since this is what pushed price towards the downside. So this candle right here, we can mark over. So let's drag this over from the bottom of the body to the top of the body, and we can actually just mark out this general area. Since we have our 5-minute range here plus this up close candle, I would rather just draw out this full area. You can see price pushes lower, comes back up, respects it very nicely, wicks up into this level. Strong sellers step in. You can be looking for an entry right here, stop just to break above this candle, and now you can be looking for a low of day and below. And this is what you can be using for the downside. Exact same thing applies to the upside here. So you can keep an eye out on the major order blocks, right? Stops just to break above these up close candles. And of course, if you want to wait for confirmation, you can just have it above that previous candle as well. So as you can see right here, there's a few different ways you can be looking to trade these up close and down close candles. Now, with this being said, let me go on to examples to show you guys what this will look like on the charts. So as you can see right here, we're on my first example. We're here on Tesla, and what we want to do is identify the trend. So as you can see here for Tesla, we end up having this nice push towards the upside, faded into the close, and I can see we're in a minor downtrend coming into market open. I have the first 5-minute candle here played out as well. So now we can mark out that first candle high along with that first candle low, and now we can go on to the lower time frames. So as you can see right here, we're on the 1-minute time frame, and now what we would like to see is if the markets can start developing a trend coming into market open. We have that 5-minute range high and that 5-minute range low established. So when we're strictly talking about intraday trends, we really like to see a break above for a push higher or a break below for a potential continued push lower. So as you can see right here for Tesla, we're breaking underneath that 5-minute range low. Weak candle closures here as well. Now what we like to see in the overall markets is really the retest of that 5-minute range low. Plus we have a couple up close candles here as well. So the levels that we can have marked out, I'm going to personally mark out this 5-minute range low. I'm going to drag it up into this up close candle, which is the order block. And basically this is my exact level I like to see price reject for that continued push lower. So as you can see right here for Tesla, we're now getting this retest of this up close candle. You can see prices respecting so far the wick to the body of it very nicely, which also coincides with this 5-minute range low here as well. This is where we can go looking short with a stop loss. Can be a break above this order block high. And now we can be looking for a 1-to-2 fixed risk to reward ratio towards the downside. Now we can play with the tape. And as you can see right there on Tesla, super sharp rejection right off of our up close candle, right off that 5-minute range low here as well for this nice push towards the downside. So this is a good example of using those up close candles to support price lower in combination with that 5-minute range low here as well. Now let's go on to the next example I have. So as you can see, we're on my next example here on Tesla. And if we're looking at its previous day's price action, you can see we're fairly neutral in the after hours coming into market open here as well. What I want to see is what happens within the first 5 minutes. And you can see first 5-minute candle breaking outside of its previous day's range. So I am fairly bullish here on Tesla coming into market open. Now we can go on to the 1-minute time frame. So as you can see right here, I have the first 5-minute played out in the markets. Another level we can have marked out as well is going to be this down close candle, which is an order block. So really for the overall markets, I like to see either the break above your 5-minute range high for continuation, or really this hold of this order block for this continued push towards the upside. So as you can see right here for Tesla, price is now returning back inside of this order block. What we really now want to see is any sort of buyers kind of step in with a risk at the low of the order block for this continued push towards the upside. As you can see right here, this in my opinion is this confirmation candle that Tesla wants to move back higher. So we can look for an entry here, stop at the low of the order block, and now we're going to be looking for a push back towards the upside. Now let's play out the tape. And as you can see right there for Tesla, we end up having a nice push towards the upside. You can see the exact level it held, which was this down close candle. You can see a couple touches off this 5-minute range high, but ultimately the key level here was this order block. Once we held this order block with a stop just a break below, we end up having this nice continuation towards the upside. Once we reclaim back above this order block along with the 5-minute range high as well, that's when we had this nice continued push back up in towards our high of day and above. So with this being said, let's go on to the next example that I have for us today. So as you can see right here, we're on my next example and we're on the QQQ. You can see clear trend towards the downside. We have a little bit of a gap up coming to market open, but you can see within the first 5 minutes showing a little bit more weakness. So we are leaning more towards the downside, looking for this previous day close along with your previous day lows. Now let's go on to the lower time frames, and now we can play out the tape. So as you can see right here for the QQQ, the key levels that I'm personally going to have marked out, number one is going to be this 5-minute range low. You can also see what we have here is an order block as well. So this is the exact level we can mark out. And what we like to see now on price is really the retest off the 5-minute range low, along with this up close candle here as well for this continued push towards the downside. And as you can see right there, price digs a little bit deeper into this order block. We have our nice rejection here as well, breaking back underneath this up close candle. This is where we can go look in short with a stop loss just to break above this order block. And now we can be looking for a 1 to 2 fixed risk reward for a push towards the downside. Now let's play out the tape. And as you can see right there for the QQQ, we end up having a nice push lower. You can see the exact levels price respected. Up close candle, you mark out the next up close candle, nicely respected. Mark out another up close candle, and now you can see price continues to push lower down in towards our main objectives. So as you can see right there, that was a good example on the QQQ on exactly how to use these up close and down close candles. And with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop a like and sub. And I'll see you guys next week for a brand new video. Peace.